from Wilsey Asset Management. You've heard his son, Chase Wilsey, who is our millennial investment expert. I'm not sure he's a millennial investment. I think he's just now investment expert.
He's an expert.
You know what?
It's
interesting.
He reads a lot. That's what he does.
Well,
he reads a lot. Yeah.
It's interesting when you watch your kids kind of go into something, and and all of a sudden, wow, he's turning into this analyst.
Yes.
He's turning into this guy that he likes to drill down to the numbers.
Right.
Which is something you may or may not want to do, but what a bonus if you don't want to do it, because you got somebody you trust who does want to do it. We're talking about retirement here. I read something recently saying that the average American aged 40 years old has less than something like $2,000 in retirement, something like that. That's a pretty scary number, is it not?
It's very scary, and people don't think about it. It's become a new passion at our firm that we are now focusing on businesses to start these 401ks. And I will tell you one thing we tell businesses too. Don't do the hardship withdrawals, and don't let them do loans. And people say, oh, that's not fair. I don't care about fair.
Well, what that means is that if you're putting money away, so let's say you've put money away for a couple of years and you've built that thing up to, let's say, $15,000 or $20,000, and you need, $5,000 for tuition that you can't afford for your kid, and you don't have the cash to do it. One way is you can borrow against that 401k, but that kills your retirement.
It kills your return.
I mean, it kills all of your return, and then it sets you back on your contribution, right?
Right. And what's kind of funny is that, again, you talked to us being on air for 20 years and so forth, and I hate to say what number I'm coming up on.
Yeah, me too.
But I'm starting to hear my friends saying, oh, I worked at this corporation, 20, 30 years ago.
Yeah.
I'm going to get a $2,000 a month pension plan from them.
Yeah.
And that's what was great before. Sometimes I think 401ks are terrible. Too much flexibility for people.
Yeah.
My friends that worked before these big corporations, there was no 401k. The company put away money for you.
And you had no choice.
Had no choice. Couldn't borrow it. Couldn't take it out because, I want to buy a house.
Yeah.
You now get a nice retirement.
Yeah. Right. And the hardship loan and you can borrow against it, which is horrible.
Yes.
I have to ask you about that real quick. I read something, and I know this happens with top CEOs. A CEO that does an IPO owns a big chunk of his company, right? So he sells stock. You're only allowed to sell certain 1% of the total volume or something per month or something, but the SEC keeps very close tabs on that. But let's say he takes a big liquidity event, and he still has a big holding. Let's say Mark Zuckerberg has a huge holding in Facebook. What I understand they're doing now is they're borrowing against that position. So they don't have to pay taxes on that. Okay, they never have to pay taxes again because they've got all their wealth already invested. They got to make a monthly payment or a quarterly payment towards that loan.
Right.
But the long story short, that's a strategy. It doesn't work for 401ks because when you borrow against it, you're not making the kind of cake that those CEOs are making, right?
Exactly. And the big thing, too, is that these guys have many millions or even billions sometimes.
Right.
So if they borrow money, take it out and so forth, that's fine. It's not going to be like, oh, my gosh, now I can't afford my Rolls Royce when I retire. But when you talk about the average person that needs, and in reality, when you retire, if you want a decent retirement, you need at least between $700 and to $900, maybe $1 million to get a decent retirement. That's going to generate $50,000 to $60,000 a year before tax. So that's hard to accumulate if you start when you're 45 or 50.
Right.
But again, you can't be borrowing against this stuff because it's going to hurt your total returns. And I tell people, oh, a house is a great investment. We can have that another conversation on that.
No.
Never ever borrow from your retirement to buy a house. That's not a great deal. I met this guy at a party on Saturday night. We're talking, and I believe in this as well. He has a large 7-figure portfolio, and he's never bought a house. And he goes, the reason why I have the 7-figure portfolio...
Because I never bought a house.
Never bought a house.
Yeah, right.
And people forget that when you buy a house, the maintenance, the remodels...
I've got a good friend of mine that did the same thing. We bought homes at the same time in an area in San Diego. He sold his house and pocketed the money. He's been renting ever since. And and he said people get on him because he doesn't have a mortgage deduction. And so he goes, yeah, but you know what? He goes, I've got a $4,000 a month payment. That's just $4,000 a month payment, and that's it.
Right.
He goes, I don't have to. The mortgage deduction doesn't bother me because it's $4,000 a month. I don't have any maintenance. I don't have any property taxes. I don't have any insurance. I really almost don't have any repairs unless I break it.
Right.
It's almost it's interesting. It's a paradigm shift from what people used to do. Why do you need to have a house?
It's funny. I had this very wealthy guy who says, he told me he calls it the American dream. He calls it the American scam. He goes, nobody thinks buying a house is this great thing, you got to do it and so forth.
Right.
It does give you some peace of mind, I'll say that. But don't ever do it
you'll never not find a place to rent. At the same time, if you got enough dough in retirement, you can rent at the hotel for a month or two if you had to. Talk about the top countries for retirement. Who's doing the best? How are we doing
Well, we're not doing too bad. The top company is Norway, which is number one, and then Switzerland was number two. No surprise.
And what are the metrics there? How much money they've got put away earlier?
How secure it is. How secure is retirement?
Oh, I see. Okay.
Yeah, I mean, do you have the best retirement? And in the United States, unfortunately, we came in at number 14.
Wow.
And that's partly
okay, so let's think about this. This is important. So the top economy in the entire universe is us, followed by China, followed by Japan, followed by, I believe it's Germany is number 4, UK is number 5, and then below falls down Italy, Brazil, so on and so forth. We're number 1 economy, but we're number 14 in retirement. If we were the number 14 economy, we'd be a second world or a third world country.
Exactly.
That's horrible.
And that's the only reason why we got number 14, because of our strong economy, our strong financial system. That's why we got number 14. But the security, because of how bad we are, and again, it's because of, I'm going to tell you, the 401ks of people now, their own responsibility to do this, it's caused problems because, as we know, a lot of people aren't doing it. I mean, 75% said they know it's their responsibility to do it. 25% are doing nothing at all.
They just don't do it.
They don't do it. And even with that, of that number, 68% is what they think is the number they need of their income when they retire. Well, really, it's probably like 75 to 80%. So while 75% think that, yes, I need to do this, they're still not thinking enough to put away. So that's why we come in at number 14, not number 1 with Norway and Switzerland. Wow. It is done for them.
We just got through seeing the Republican National Convention and the Democratic National Convention. We have to talk a little bit of politics here because, really what this comes down to. Look, I was having this conversation with my daughters, and one of them goes to art school, gainfully employed at $70,000 a year, by the way, in art school. The number 1 and most employable major in this country, art. Do you know why? Because the number 1 export in this country is entertainment. If you honestly, movies, film, music, video games, you would think, your kid tells you you're going to be an art major, you're thinking, okay, I better keep them on the payroll till they're 45. Not so much. She's been full-time employed for 3 years while she was in art school.
Wow.
And now is being recruited by companies like Nike and such, but she's very, 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 very liberal. She went to art school for 4 years.
Okay.
The other one, who's very, very much a conservative, is going into physical therapy school. But the interesting part of this thing is I hear the tale of two tapes, and what they're really concerned about is the economy. For the first time, 20-year-olds are concerned about the economy here. I'm worried about what the Supreme Court's going to be for my kids and my grandkids. What did you take away from this latest Democratic National Convention? Are you concerned if Hillary Clinton comes in office, it's going to change our retirement portfolio or how things are done in the stock market?
Yeah, and I try not to get too political. I
don't either. But let's talk about what it's going to do to our tax code and what's going to do for our retirement, because that's really what it comes down to.
I mean, we know. I'm going to try to do this. I'll be political, not favoring anybody over the other one. Clinton seems to go more to the left, more liberal, saying we need to have education paid for kids. We need to help people out, healthcare and so forth. That's more socialism.
Okay, so let me tell you. I will be the guy. You don't have to be the guy. Hey, your education. I'm sorry you don't have a job, but your education was free. That's the takeaway I have from that. Okay, who needs a free education if you can't get a job? Okay, so I will say it. Brent doesn't have to say it. You can be apolitical. I will be political.
Right.
What is the other side saying?
The other side, if you listen to him, and again, I know he says a lot of strange things, and he says probably, you would be like him. You say things you probably shouldn't say.
Listen, I think it comes out. Brent doesn't do that.
I don't do that. Trump does do that. The other guy does that. But if you listen to what he's saying, too, he's saying if you work hard, you put your nose to the grindstone, you're going to do well. But you've got to work hard. We're not going to just give you stuff, and that's a big difference.
So what do you take away from the financial transaction tax that we heard about that? I mean, that's something that's a little bit that's interesting. Talk about that for a minute.
Good example of what the other side, what the Hillary Clinton wants to do. She talks about, and again, she didn't want to do this in November. It's a financial transaction tax, and what this is now, when you buy or sell a stock, when you sell a stock now, you pay capital gains to the state and the federal.
Right.
The financial transaction tax is a tax on the transaction on top of that.
So it's almost like a value-added tax. Like you're paying along the way just for doing it, right?
Well, it's not a value-added because you're paying for the transaction. And what's bad about this is you could pay for it in 401ks.
Oh my gosh! So suddenly, this is chipping away from your return.
And this was done many years ago, and they dropped it. There's a couple of countries, who was it, Germany and another country, that they did it. What they found was people started trading in other countries.
Yeah, so suddenly it pulls money out of our country.
This is what I talk about. You cannot tax people on things because they'll find ways around it or go somewhere else,
that's a scary part.
which is a shame. The other guy, is that music?
That music's it. But you know what? He's going to be back on Friday. He'll finish that sentence Friday. Brent, thank you so much. I appreciate it. Wilsey, Asset Manager, Brent Wilsey, thank you so much, pal. We'll see you on Friday. Good stuff.
I call you.